All right, welcome everybody. Thanks for joining us. How you doing out there? My name is Eric Gebhardt. We're going to go ahead and get this started. We're going to talk about automated options trading with options spreads. So no more screen watching and babysitting your trades. We have proprietary algos that do a lot of this work for you. Let's see if I can line that up. These webcams. Hopefully it looks okay on your screen. Just letting you know I'm real, we're live, and we're gonna look at some automation with options trading, something you've never seen before, with pre-built strategies. You can use this for hedging or directional, non-directional strategies, or just pure speculation. We're gonna look at the most amazing trade alert technology you've ever seen. And really, we wanna stop wasting money on buying options all the time. I think we can do better, and we're gonna show you how we do it. And we're gonna have a live demo. And remember, we're speculating, and that means we accept risk. So we're trying to make money, and there's always risk. And do take a moment and look at that risk disclosure. It is important. I'll give you just a moment to read through that. The key thing here, remember that only risk capital should be used when trading, and that past performance is no guarantee of future results. So how does this look to you? Familiar? Probably so. Just a lot of back and forth consolidation, choppy market action, and a lot of these strategies and so forth that you'll be hearing or you've heard about in the past from wherever, they're trying to help you sell the highs and buy the lows and pick the tops and pick the bottoms. And that's all good and well, but we don't even try to do that. And we're going to show you why we think we have a better approach. And we're going to use technology to help us along the way. Don't end up like this struggling trader here. You want to be like this robot with all of the transactions handled for you. A little bit about AltaVest since 1997. We've been doing this 25 years, folks. We're a registered introducing brokerage firm, and we've done millions and millions of contracts over the years. So that's yours truly there in the middle with some of our partners and staff there on the S&P 500 options pit, the floor traders. And we are registered with the CFTC, and we are members of the NFA, and we're located in California. So with all of our experience, we put that into our trading solution that we're going to show you. You don't have to be that lone wolf here trying to figure everything out by yourself. Let us be your partner, use our technology, our expertise, and our guidance, and we're going to help you along the way. So we've done this, built what we're going to show you here for with decades of experience behind us and lots of industry veteran input. So a little bit about who I am. I've been doing this about 30 years now. I'm Eric Gebhardt. I'm a co-founder of AltaVest. I have my Series 3 license since 1991, and I am a graduate of USC, or University of Southern California, the Trojans, and I'm a BS in Business Administration from USC. I've done quite a few presentations, especially in the last few years. Maybe you've seen some of those in the past. If not, hopefully you're going to like what you see. I began in the mutual fund and securities industry with my Series 6 and 63 licenses. And then I moved on to the Series 3 commodity futures license, of course, which is what we do now, trading futures and options. And I also have my Series 65, which is the investment advisor law exam. All right, what I'm going to do now, with that said and the introduction out of the way, if I turn the webcam off, that gives you more room on the screen. And so we're going to jump into the kind of the heart of the presentation here. 3 hurdles. Let's see if you can relate to these. And feel free to jump in anytime and ask questions, put things in the chat, whatever it may be. And I can't always respond right away, but I do need your input and your feedback, especially as we get towards the Q&A. And I think I'll probably answer a lot of questions as we go as well. But do put your input in to the chat there and ask questions. So how do you trade in environments such as we're experiencing a lot of volatility? Maybe you're trying to day trade, maybe you're trying to pick stocks, but maybe there's only a less than 1% success rate for day traders. Is that true? Is that possible? According to this article, that is the case. says here, Charles Schwab analyzed active trading accounts for a 6-year period of time. Traders substantially underperformed a simple low-cost indexed fund, and the active traders were the worst in terms of performance. Here's a study out of Taiwan over a 15-year period. Less than 1% of the day traders consistently beat the market compared to a low-cost ETF. 80% lost money. And then out of Brazil, 3% of the traders made money, but less than 1% made more than the minimum wage. So difficult out there, folks. And even the professionals, look at this, almost 79% of active fund managers underperformed in 2021 over a 10-year period of time. 86% of the active fund managers underperform. So those are the professionals that sit in front of the screens all day. They're still underperforming. So maybe you can use social media to help you in your trading. Social media stars, moving markets, being popular means never criticizing. Basically, you always have to be bullish. Or maybe you got to follow someone like this. Says something here about making $750,000, driving a Rolls Royce there. And how about this though? Remember during the pandemic, all the day trading was making headlines. It looks like all those day traders have lost any money that they made during that era, according to an estimate by Morgan Stanley. So that day trader army might be broke. Some of these things you might see on social media. Here's a kid, he said his parents gave him $500,000 to trade in the stock market, and now he's lost 96%. So let's avoid that, folks. Maybe we should listen to the professionals, the pundits, the talking heads, the fund managers. Everyone knows Jim Cramer, or everyone hears about ARK and Cathie Wood. Well, what are they up to? Here this year, March 25, Jim Cramer says the bear market is over. And then here's what it looks like. That's right when he said the bear market was over. And here's the performance since then. I've missed a couple days here, but nonetheless, I think we're down 20-something 6%, I think, on the NASDAQ, almost 20% in the S&P. He says Nike's got a bullish tone right here that subsequently crashed. Here he says about oil right here. Oil is not going down. So it dropped from about 123 down to 91 or so since then. How about the ARK Innovation Fund? Well, people, maybe they're admitting that maybe they were wrong to some degree, but they're still sticking with their strategy. So they think the bottom occurred in January. So that would have been back here sometime. And then since then we dropped, well, actually almost 50%, it looks like, since that call. So the professionals get it wrong a lot, folks. We don't want to try to rely on just people talking their book up or down or getting paid to make good entertainment and so forth. We need a better approach to that. Even Goldman Sachs losing $2.6 billion investing in stocks in the last 4 quarters. Can you look at crypto? How about that? Well, apparently not. How about some of these firms here losing 99% of customer funds? This other hedge fund in the crypto space, they're now bankrupt. They're trying to recoup in assets, but that's not going to work. They can't find the founders. They're missing. They're currently unknown. They managed 10 billion in assets just as of March, and now they are wiped out. Anyways, that's all called selling a story. It's narrative trading. And this is something we need to avoid, folks. It's just going to be, you're going to tie yourself in knots trying to trade off of stories and headlines and pundits. So how can you beat the market, even if you are trading and investing? Well, let's take a look. Here's an article about beating the market. It says here that maybe the monkeys actually win. So they use this back test here. It says, on average, 96 of the 100 monkey portfolios were beating the generic cap-weighted index. They outperformed the benchmark by an average of 1.7% per year. So there is your best manager right there. And maybe we ought to hire that little creature there. I see some questions coming in. Perfect, folks. Keep them coming. And let's keep the presentation going. But yes, keep the questions and comments coming. I'll get to them in just a moment. Number 3, this is the third hurdle, emotions. How many of you can relate to that? I think we all can, even if you've been doing it like I have for 30 years and you're a professional in the industry. It's still not easy. It can be expensive convincing the markets that you are right. So that you don't want to argue with the screen and argue with the price. You don't want to end up like this. And you want to stay off of this roller coaster and break this endless cycle of optimism and euphoria when you're making money, and then you're losing money and you're despondent, and then you get optimistic again. Stay off of that roller coaster. But really, it's difficult because our worst enemy is us. The Motley Fool had an article a few years ago. It's still valid, so I kept it in here. 3 common biases. There's confirmation, and there's anchoring, and there's recency bias. I don't need to go into each detail, but I think this one image will summarize it for you. I think we've all fallen into this trap sometimes where when things are going well, you start to think you're a genius. So let's try to avoid all that emotion and use algorithms, use computers, use technology, whatever you want to call it, AI, whatever. But we need some help, folks, to do some of that heavy lifting for us. Remember, algos are non-emotional and they're dominating the marketplace.
Sorry to interrupt you, Eric. We have lost the sound.
Yes, I see that. I see. Sorry, folks. I missed out on the sound there. Anyway, I think you see the screen. I won't go backwards here, but that's revolutionary trading. And here's what it used to look like in the past. Just a quick shot I took a few years ago on the trading floor, and this wasn't that many years ago. And now, folks, this is what it looks like. Here's our competition. You've got built-in risk controls, full automation, and that's who we're competing against. So how can we use some of this same type of approach or technology to help us with our options trading? That's what we're looking at. Strategies for any market condition, including bearish, of course, or even non-directional. And we're going to look at how insurance companies might trade options. And we know how they operate. They get paid premiums and they assume risk. They're selling time, they're managing their time. They insure themselves, they're always hedged. That's called reinsurance. And they're consistent and they're patient with their model. And they simply look at probabilities and math. Really is all they're looking at, statistics, actuarials. And we can look at that same approach and try to apply it with our options trading. We can collect premiums, try to make lots of base hits, to use a baseball analogy. Going short options, we need to be consistent and patient. Manage our risk because we will have losers. Manage reward, that's just as important. Don't get overly greedy. We need the proper tools to put this into place and make it happen. And again, we're looking at lots of base hits. We're not swinging necessarily for the fences on a lot of these trades. And we're going to show you that in just a second. So these are short option strategies where you collect premium, directional, bullish, bearish, or non-directional. Targeted outcomes with predetermined risk. These are called credit spreads where you collect premium. And the way we do it, of course, with a spread is that means you're always covered. And I'll show you that in just a second. We're insured. So that means your risk is always predetermined in advance as well as your reward. And then these can be non-directional strategies. And then we're going to apply this to stock index options, not individual stock options. And why are we looking at trading futures index options? Well, first of all, they're less volatile. An index is always less volatile than an individual stock. And with an index, it's easy to apply strategies in any direction, up, down, or sideways. And then, of course, if you're looking at an index or maybe 2 indexes or 3, you're really just looking at a couple different markets, not 6,000 or 7,000 stocks and ETFs to try to filter through. So there's some big advantages to that. And here's an example of a credit spread on a, this is the E-mini S&P 500. You get a wide margin of error, so you can see the upper boundary on this trade with your calls and the lower boundary with your puts. And in this particular case, if the market moves around and kind of stays within that range, this trade would end up being profitable. So don't worry about this yet. I'll explain it in just a second. But I want to jump into probabilities and something called the Greeks. If you're familiar with this, it goes quickly. And if not, it's real simple. We're looking at just two of the Greeks. One is delta. And what that means, it's really a measure of how much the value of an option will change when the underlying asset changes. And it's also the approximate probability of that option expiring in the money. So for example, if the delta is 0.25, that means there's a 25% chance it expires in the money, but conversely, there's a 75% chance it expires worthless. So that's how we like to look and use delta. What is the chance that this option is going to expire worthless? And we'll show you in just a second how we get that all figured out. Remember, delta is always moving every moment as prices and time move as well. And it is not the probability of a winning trade. So keep that in mind. It's important to keep in mind. And then the other one is theta. That references time decay. So every option is limited with its lifespan. And so you refer to time as theta, and it's a negative number, and it equals 1 day of time decay. And just a simple example, an option's at 10 points, theta is negative 0.05, and then the next day the premium would drop to 9.95. The next day after that, it would drop to 9.90, and so forth. And here's what that looks like on a graph as you approach time zero. That percent of the premium remaining drops and drops and drops and drops to eventually zero as time runs out. Now this is interesting here. There's a great little video I ran across recently. I thought I'd throw some screenshots from it. This is the link for it. And they're talking about this popular trading strategy with options, and they're talking about basically just buying options. If you just buy stock options, turns out it's actually quite risky. It says the appeal for a lot of retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. An option spread is buying and selling different contracts. It's a very common way for investors to hedge risk and volatility. It's usually cheaper because you can offset your cost by the proceeds from different contracts. And take a note of this. In 2021, 11% of Robinhood active users made options trades, but fewer than 1% actually made a multi-leg option trade or a spread. And those are the kind of strategies been used on Wall Street by Wall Street professionals for decades. So what she's talking about is what we're going to show you and what we're talking about. And I'll show you here a quick example before we jump into the live demo. Here's an example of selling a call spread and collecting premium. It's a covered call spread. That red line at the top is a 45.50 call in this example. You sell that and you collect 4.5 points, and you simultaneously buy a 45.70 call, that's the blue line, and you pay 2.25. But the net result of the trade is you collect $112.50, minus your commissions, of course. And then the market stays essentially below this red line, then that trade should end up being profitable. And kind of the same thing with a put, just the opposite. You sell a 36.60 put in this example, that's the red line. You collect 3 points. You simultaneously buy another put below it. You pay a point, and the net result is you collect $100 minus your commission. And again, just a typical call spread and put spread there. And these are not naked options. These are all insured. Your maximum risk is capped in advance. That's what you call a covered option spread. So you have no naked trading allowed with what we do. If you're doing naked options, I'd highly recommend you don't do it. It's going to work well for a while maybe, and then all of a sudden you'll give everything and more back. I've never, ever, ever seen it work in 30 years over a long period of time. And remember too, if you're doing covered spreads, that means you have no margin calls and your risk is always limited in advance. And that's a big advantage without having margin calls, because that way you don't have to throw good money after bad and you don't have the market, jerking you around and trading you. So here's an iron condor. It's just a put and call spread done together. Sell an out of the money call spread, you collect the money, and you sell an out of the money put spread and collect the money. And you do that simultaneously, and you look for the market to stay in that range, generally speaking. And here is our proprietary strategy. This is our unique approach, our kind of weird strategy, some people call it. We're kind of proud of that. This is a variation, and I'll show you. It's called a Dragonfly. We came up with this strategy years ago. It's six-legged spread to collect premium, and it looks similar to a Condor, except it has two additional legs. And let's run you through that. So here's what it looks like. Here are the calls. You sell 4 of these 40-60 calls. You buy 3 further out of the money and then 1 closer to the money. And same thing on the puts with the same structure. Selling 4, buying 3, and then buying 1 closer to the money. You'll notice the one that you buy is, in this case, 50 points closer to the money, and the same with the call as well. And that can be 60, 70, 50, 30, 40 points. It just depends, and we're going to show you how that works. But the thing is, being closer to the money by 50 points in this case, and you own this call. So this completely changes the dynamic and characteristic of how this Dragonfly behaves compared to a Condor. And the risk reward is completely different. Basically, you're buying some additional insurance here and here. So it makes the trade a lot more robust, but it does limit the profit potential just a little bit more because you pay money to buy that put and to buy that call. But we think it's worth it, and we'll show you why. And there's even unique strategies we came up. You can do half a Dragonfly call spread, so it may be profitable if the market's moving sideways, the market drops, or even if the market moves modestly higher. So it's just doing the call side of a Dragonfly. And you could flip this around to just the put side if you wanted to, if you were, actually, bullish, for example. And here's something we call a bear hedge. It's probably better just to show you. You sell an out of the money call spread and you collect the premium. And with that money you collect, you buy an out of the money put spread. Just that simple. And you can do this a lot of times for even money or even a small credit, so it doesn't cost you anything to place that trade oftentimes. But here's what you're thinking. I know what you're thinking. That's why I put this in here. The confused face of Jackie Chan. Which market do you buy or sell? What strategy do you apply? At what price? At what timing? And then once you have a position, how do you manage it for risk and profits? Well, the answer is called Theta Trader. A couple of our floor traders, by the way, great picture down in the trading pit. So these are pre-built option spreads. Our proprietary algo will create these theta trades on a daily basis. So advanced automation, bull, bear, and flat market conditions. And then here's a real key, folks. It's one thing to have a trade created, but then how do you manage it? Well, we can automatically manage it for risk and profit, something called the RTI, or the risk thermal indicator. And that's our Theta Trader software, simple, effective option spreads and profit and risk controls. So it is time to switch gears. If you give me just one moment, I have to switch screens. All right, very good. And I do see people's questions and hands raised and all. I just can't get to everything right on at the moment. And no, just a couple quick comments. Nope, the spreads are not too complicated. Someone commented, and that's why I'm going to show you this demo and how easily it can be made for you. All right, just a second here. But yeah, keep your comments and questions coming. So right now you're looking at my dashboard for Theta Trader. And you'll notice it's very simple, very clean, and this is a demo account. So in a account, if you had an account with us, it would look very similar, except it wouldn't have exactly all the same menu items, but that's not really too pertinent now. But take a look here. This is your Theta Trades section. Here are your open short positions for any short option spreads and any long option positions here. And then here would be your account info. And this is integrated directly with your AltaVest trading account. So Theta Trader works with your AltaVest trading account. Then of course any current market quotes. You'll notice there are bullish and bearish and neutral strategies, or non-directional. These are all pre-built and pre-populated for you. You'll notice here there are 3 markets: the E-mini S&P 500, the E-mini NASDAQ 100, and the E-mini Russell 2000. And those are the 3 markets that we focus on, and I'll show you why in just a moment, but some advantages to those markets. And for example, we looked at condors and dragonflies, so let's look at some non-directional strategies here. If we want to look at today's Theta trades, you click here, and all these are pre-generated. The algorithm has selected the trades for us. They have anywhere from 16 to 60 days till expiration on this particular day, although that can vary a bit depending on a lot of conditions that are, working behind the scenes. And you'll notice here, this is your maximum profit potential at expiration. This is your targeted annualized return at expiration. You want to use this number to compare one condor to another. So you can see that it makes sense that if you did a condor with 16 days till expiration, and you were to do that every 16 days and maximize the profit every time for a year, that would be the result. So that is not realistic to expect that kind of trading result. It's really here to compare this trade to any other condor for the day. It's kind of a relative performance comparison. And I like to look at, just randomly pick the one with the most time during these demos. So we're going to drill down. And pulls up this table, and I'll walk you through some of that in just a second. But first thing you can do is look at a chart. That gives you sort of a helicopter view. Here's the call spread you're selling. Here's the put spread you're selling. So you can see the 3280 put and the 4300 call. So you're talking over 1,000 point difference between the call you sell and the put you sell. That's a very wide spread, kind of a wide margin of error, which is great. Now you can see here the expiration date, the settlement value, the net premium you're trying to collect, your put risk, call risk, commissions, cash required, profit potential. This is your targeted return on cash. And then this is your targeted annualized return. Now let's look here at the strike prices. Remember, these are all pre-selected for you. You could change these if you wanted to, but I would just stick with what the Theta trade is. For the most part, that's the whole point of having the strategy and the solution doing the work for you. So you'll notice this put that you're selling has a delta of 9.81. So that means there's over a 90% probability that this put would expire out of the money. That's according to the math of the deltas. And look at the call, 6.73% delta. So again, 93% plus probability that this call that's being sold will expire out of the money. And it always defaults to a sell when you're selling a condor, you're trying to collect the net premium. It always defaults to a quantity of 1. And if you change it to 2, you can see the cash required goes up or down. The premium the maximum profit potential goes up or down as you do that as well. And then I'll also point out that you can change the pricing here or just accept the default value that is already calculated for you. We'll try 4 of these, and we'll go ahead and place that order. And there you have it. Just a demo account assumes the order's filled. Let me go back to the dashboard and let me show you. This is a really, really fascinating tool. It's a time machine to go backwards in time, and you can back test some of these option strategies within any window of time that you prefer. And I'll show you that in just a second. But first, I want to show you a Dragonfly. So again, these are today's model Dragonflies. The computer has generated these trades for us. We'll click on this one with 74 days, the September end of month expiration. And you can see a graph of that trade. You can see the call side of the trade and the put side of the trade. So same type of data, except notice that the cash required is of course higher on a Dragonfly, and that's because, and so is your profit potential, that's because you're selling in increments of 4 calls and 4 puts. And if you wanted to do 2 Dragonflies, it would be 8 calls and 8 puts, and everything moves up by that same ratio. And then you see the targeted return on cash and your targeted annualized return will always be a bit less compared to a Condor. And of course, that's because you buy this option here, this call, and you buy this put here as additional hedge against that short call and short put position. So that's why the Dragonfly is more robust, because you own that additional long call and long put. But you'll also notice that in this case, the put still has over a 90% probability of expiring out of the money, and then the call has over a 93% probability of expiring out of the money. So that's just what the math tells us. We'll jump in here, we'll say we're going to do 2 of these, and each one for a Dragonfly you can kind of suggest about $5,000 per Dragonfly. That's how much is required to kind of place one of these Dragonflies. And then also note too that all of the results in Theta Trader are net of all commissions and fees and so forth too. So that's all pre-calculated for you, but that's just that simple. And that's how you place a Condor or a Dragonfly. Now, I want to point out our simulated backtesting time machine here. And keep the comments and questions coming, folks. I see them coming in and I'm not ignoring you. I see them. I just want to get through the demo, and I think I'll probably answer some of these questions as we go. Right here, there's a trade simulator, and I've preloaded some trades here already. We can go backwards in time. Let me squeeze that down. So here's an end of month, August 2021 Condor. So this trade was placed on July 6th last year. This would have been one of the Theta trades for that day, and you can use these tools here to go forward day by day, and you can see here each day you can see the change in the market price over here, and then the P&L on the trade, and then the RTI is green, and I'll explain that, but green means good, do nothing. And then we can use this play button. You can see the trades turning a little profitable, and then it went a little bit negative, but essentially you're waiting for theta decay to really work. Now you can see the trade turning more and more profitable. That's because the market's just chopping around, maybe moving slightly higher, but theta decay is still working to your advantage. And then it turns blue, and blue means take profits. So that's your profit taking signal. The computer says that's enough money on that trade. Don't wait till expiration. None of our trades are held till expiration. We always close out the position, whether it's for a win or a loss. So we're not holding these till expiration on these credit spreads. So you can see here, this blue signal says get out and take profits. And I want to emphasize that this can be automated, and I'll show you that in just a moment, but you don't have to screen watch, you don't have to babysit. You can automate this. Theta Trader is monitoring your account, it's scanning your account, and when the algo says take profits and it turns blue, the orders can automatically be submitted for you. So that's kind of a typical Condor, how that might look and work. And that was the end of month August. Now, how about a Dragonfly? Again, that's the same day, July 6, 2021. Instead of a Condor, we did the end of month August expiration Condor. Let's assume we did an end of month August Dragonfly. Now this is interesting. It turned blue with a profit-taking order on August 4 with 28 days till expiration. Now again, if we look at the Condor, it turned blue on August 20 with 12 days till expiration. So you can see how the Dragonfly matured over 2 weeks more quickly compared to the Condor. So that would allow you to get out of that trade. It matured that much more quickly. Take your money, take your profit, and move on to a different trade. So sometimes a Dragonfly can create what we call an earlier exit and allow you to turn over your money more quickly. And that's just, again, the different trade structure here. You own this call and you own this put, and that helps that trade mature more quickly oftentimes. I also want to point out you can use this tool. You don't have to do the play button or day by day. You can just go right to the end all at once. Okay, here's a bear hedge. We talked about that briefly. Again, you're selling an out of the money call spread, and you use that money to pay and buy an out of the money put spread. And don't pay attention to the colors right now. Let's just watch this play out. Okay, so you see if you did hold a spread like that, this one ends up making money because it settled below the put spread that you own. You bought this put spread, and you still get to keep the premium that you received for selling that call spread. So that obviously is a favorable example of what a bear hedge, firing on all cylinders looks like. So we won't go cover all of the details of that, but you can see how a bear hedge might work for you. And of course, it could work against you too. If it runs up against the calls that you sold, then you just have to close out those positions. And I'll show you how that works. Here's a half a Dragonfly call. So you're doing not the full Dragonfly, you're just doing the call side. Maybe you're a little bit bearish and you want to just collect some premium. And you can see here that one turned profitable very quickly, still with 49 days till expiration. It gave you a blue profit taking signal with being in the trade for probably just about 3 weeks. So you can just do half of a Dragonfly or even just half a Condor, which would simply be a vertical put or call spread. All right, now here is an Iron Condor, another one. I want to show you an example of maybe what doesn't work. And I want to point out the colors here. You can see they're turning yellow. That's a little elevated risk, and you can see the P&L is red. Your trade's negative. It turns orange, which is even more elevated risk. But still, Theta Trader says do nothing. But you can see why it's getting elevated with risk, because the market's moving higher very quickly, getting closer to that upper boundary of those short calls. It's getting very close, but still do nothing. There's a little bit of theta decay working as well. But it does turn red. Too much risk, take your loss and move on. And again, you can automate this. So then when it turns red for too much risk, or blue for take profits, it can automatically place that order for you. So I wanted you to show how that works when a trade doesn't work well. And then here's a December end of month Dragonfly. So the same trade except a Dragonfly. When I say same trade, I mean expiration. So you can see same kind of thing, elevated risk with the orange, and then it turns red. Take your loss and move on. So I just want to point out that no trade is impervious to losses. So I do want to put that in there, but I want to also show you that we can automate that risk management and profit management. But one other thing, here's another key point compared to a Condor and a Dragonfly. Let me show you this. Okay, turns yellow, turns orange, and then it turns red. Too much risk, get out and take a loss with 15 days till expiration on this particular Condor. So this is the end of month January 2020. Now, here's an end of month January 2020 Dragonfly. So instead of that Condor we just saw, imagine we were placing a Dragonfly instead. And look at that. It actually turns profitable with 29 days till expiration on June 3rd. So that's a profit-taking signal. And you look at the Condor, you go back to June 3rd, and the trade actually was still green, and the P&L was a little bit negative even. So you can see how the Dragonfly in many circumstances can be very robust. It can issue a profit-taking signal when a Condor doesn't, or it can issue a profit-taking signal ahead of a Condor. So that's why we really, really like the Dragonflies in a lot of cases. But having said that, we do plenty of just, you know, selling call spreads or selling put spreads, or every now and then, you know, a Condor as well. Now let me show you how to do this. You go under My Account, you go under your settings here, and it's just that simple. Activate your risk manager, click that box, activate profit directive, and save your settings. And that will then automatically scan your account and then place those orders for you whenever the trades turn red, or whenever they turn blue for a profit or a loss. Now let me also show you here, there's a great help file and the glossary if you want to look at all the color coding and what it means. I won't go into all that, but it's all right here. And we have video tutorials here on the Theta Trader platform itself, but you can see it's very simple and user-friendly. Probably don't really even need those tutorials, but we put them in there. There's also video tutorials on options trading in general, if you need to brush up on that at all. And then I want to point out our proprietary research. And then I'm going to show you in just 1 minute, we'll be there in 1 minute, the best feature of all. We have a trade alert functionality, and we're going to go backwards in time and look at all the trade history for the trade alerts. So you're going to want to see that. But first, we do this. This is our proprietary research. It's called Trade Scope. We do it each day for Theta Trader clients, our members. So we look at some chart analysis, and we look at some support, resistance, and then indicators and whatnot. We have a market outlook. Kind of looking here at the federal probabilities on the target rates and whatnot. But that's all proprietary. People love looking at that. It's really a short read and effective. And the same thing with our daily trading summary. We generate that, of course, every afternoon. What's happening in Asia, in Europe, and the US, and then we're looking ahead at any key events and economic things on the calendar, and we'll look at any daily trades. Here you can see we sold call spreads the other day and so forth. So that's how that works on this section over here, but I want to go back real quickly. We can go back to the dashboard, and you'll notice here you can look at all your open positions on one page, all your closed positions on one page, or you can simply look at your open positions right on the dashboard. Very convenient to do that. And this is where you would find your trade simulator back here. And if you want to start from scratch and build your own trade, you can, something called Trade Builder, but hardly anyone uses that, and people rely and lean on the algorithm to do the work, and that's really the whole point of Theta Trader. And if you want to look at any other strategies, maybe here's a bear hedge, you could look at something like that. It all works the same way. The algorithm is thinking hard behind the scenes and doing the work for us, picking the strikes and the values, managing the risk and reward. You know, here's what this bear hedge looks like. Sell this call spread, buy this put spread. Maybe we'll do a quantity of 2 of these. Looks like you do it for a small credit, and we'll go ahead and place that order. So that's how that works. But you can just spend time on this and look at all these different strategies. But there's one other thing I'll point out, and then I'm going to show you the trade alerts. I don't want to keep us here too long, folks. I know we're all busy. But just to point out, again, bullish strategies are available. You can simply outright buy calls if you wanted. Other strategies as well. You could you know, do butterflies if you're into that kind of thing. Those strategies. Occasionally we do something like that as well. It just depends on the market environment. But just want to point out, you do have access to all these different strategies, or you could build your own. And with that said, I think it's time to switch gears and let me show you, I think is the best feature of all. Let's try to make this easier and more effective. How about that? Easier and more effective. These are trade alerts, and they're one-touch responsive alerts. You simply receive an alert on your device, and all you do is touch accept or reject. So our technology handles the rest for you. Touch that accept, and the order is placed. Here's what it looks like. I'll try to get a better video soon here. It's hard to get another film. Anyway, it doesn't matter. But here you can see, you'll receive a text message, and you just touch that link, and it takes you right to the alert on your smart device or email. I just want to point out, you get an image of the graph of the trade. This is a dragonfly, a description of the dragonfly, the account number, the amount of cash premium you're trying to collect, the cash required, and then the quantity is pre-selected for you. So the quantity is already, and the trade is pre-sized for you and your account, and the trade is sent to you, and it's custom and tailored to you and your account. It's not going to be the same trade every day, and the strikes won't be the same or same expiration. So anyway, you can see here the days till expiration, targeted annualized return, and if you like what you see, you just touch accept. It's just that simple, and then the order gets placed. So here's something I want to show you. This is a 12-month trade alert history log. So do take a moment to read that before I show you our history of the trade alerts. Essentially, these are all of the trade alerts in the last 12 months, the date they were entered, the date they were closed out, whether they were, a buy or a sell, and whether they were a win or a loss. Okay, so let's look at the first page. I'm not gonna show everything here and go through every line, but here's the first page, and let me just show you. I'll go through all of them here first, and then we'll go backwards and make some sense of it. And that's the last one. So let me go back, just kind of giving you a preview. But you can see if it's in green highlighted, it's a winning trade. You'll see here the sell or a buy, so the S or the B for sell or buy, or win or loss. So the W is a win, L is a loss, and N is neutral, no win or loss, and just that simple. And you'll notice that, again, just like we talked about in the Theta Trader demo, we talk about the deltas and the probabilities of a trade or option expiring in or out of the money. You'll see how a lot of the sell positions where we're selling and collecting premium and selling these options end up being winners compared to the ones that we occasionally buy ends up being the losers. So that makes a lot of sense. That's just math. We looked at that with the deltas, and you have a lower probability of success when you're buying options. It's just that simple. You'll notice almost all of these are on the stock indices like the Russell or E-mini S&P 500, or even you'll see some NASDAQ. One or two gold spreads we have in here. And you'll notice, dragonflies and dragonflies, again, those are collecting premium. Those are the strategies that have those deltas that essentially suggest you have, the delta of an option expiring out of the money is, maybe telling you that it's a 90% plus probability of expiring out of the money. So here's the next page on that. So again, you can see, if you look at the cells, a lot of times those are the winners. But of course, here's a neutral one. Here's a loss. So it just depends. But you see how the winners can start to add up when you're selling and collecting premium. You can end up with a pretty high batting average, I guess is a baseball analogy there. And then you'll see some additional trades here. And again, you can see these are buys, that's a buy, that's a buy, that's a buy. And those lost, they didn't make money. And that makes a lot of sense. If you're going to focus on buying premium, you're going to have to expect that you're going to have probably a lot more losers than winners if all you're doing is buying premium. Here's a good page. That's quite a string of winners, actually. And again, you see the buy positions here are the ones that end up being the losers most oftentimes. But you can see all of these here. These are a lot of call spreads, selling call spreads, collecting premium. And then you can see these here placed in June. Those are still open. And you'll notice too that you can see the date entered on this one, May 16, and the date closed, May 24. And here's one here, May 17 to May 20. And we were able to get into that trade and out of that trade fairly quickly. And that's simply because we had very favorable market movement. But you don't always necessarily get such a quick exit. You know, here's from May 18 to June 9. Here's these actually working pretty well. Here's something more common, more like a month. You have something from June 16 to July 14, and then you close that out, and that turned out to be a winner. So when you place these trades, you can't expect necessarily to get out of them within a day or two. It can happen, but typically, you know, you're looking to stay in those for a month or so by the time it matures. And then here's the last page. You can see these trades here from July 13, 15, and 18. And you can see those are call spreads we're selling. They're deep out of the money call spreads. So that's our 12-month trade alert history log. You can see all the trade alerts that you would have received in the last 12 months. Now, if you want to join us, we'd love to have you become a Theta Trader member. You get the software with all the Theta trades, the RTI, the trade simulator. That software is valued at over $3,500. And then we just talked about the trade alerts, that one-touch trade alert technology. And all those trades, of course, are tailored for you and your account. They're pre-sized, the quantity is correct for your account. And then, of course, once your trades are filled, then Theta Trader will monitor and track those positions for you. Yearly value over $4,400 for that trade alert service. So again, the software and the alerts valued over $8,000. But here's the thing, we kind of make it all work because we're real people and we talk to you. So you get a private coach. That's all part of your Theta Trader package. You have a co-pilot, someone who can work with you, talk about your prior trades, talk about any future ideas you might have, whatever it may be. That value is at least $7,500 to have a private coach. And this is not just a phone clerk. We're real people with decades of experience and fully licensed. So again, your Theta Trader software includes the alerts and your private coach. $7,500 value there. So total value over $15,500 in that Theta Trader package. And now I don't want us to forget the proprietary research, valued at over $2,900. And our online video tutorials I briefly covered. Of course, that's just part of the Theta Trader package, but just want to point that out. So you get everything, a value of over $18,500. So Theta Trader, the alerts and the private coach with the research. And our membership price in the past, we used to do a lot of in-person events, and we'd have a price of $4,000 on our membership. We've been doing this online for a while now, so we can do this for even less at $29.97, but we can do a lot better because it is a live presentation. $797 for the Theta Trader membership, and how about we do even better? We can go way, way beyond that retail rate for you. Discounted tremendously, one-time low payment of $597, and that's your Theta Trader membership. And that's again That's a lifetime membership, and that's one payment. It's not every year, it's not every quarter, one time, $597. And here's how to make it happen: cf.altivest.com/TT. And I do have that valid offer good through Friday, that discount. And this is my direct phone number. I want you to write that down. In fact, take a screenshot of this page, because you'll have the link and you'll have my phone number. But call me if you have any questions. It may go to voicemail or it may bounce to someone else. And well, of course, I'm live right now, but you can call me in an hour or two or whatever, and we'll be glad to help you out and answer any questions. There's also a 30-day guarantee on that membership fee. So if you get signed up and something happened and you can't move forward, just let us know. We'll refund that membership fee. We're not holding you hostage to a membership. That's not our business model. We've been doing this over 30 years, folks. A few FAQs. How about tax efficiency? Yes, trading with us is tax efficient. These are 1256 contracts. That's the IRS code and how they treat the contracts we trade compared to a lot of the stock trading. So if you're trading individual stocks, in this example, I won't go through all the math, but you might end up with a 12.6 return. If you're trading futures options, your return would be 14.64%, or a tax savings over $2,000. That's tax efficiency. And there's no more itemizing as well. So no more wash sales and itemizing all these trades. All you do is get one number. That's the result for your trading, and you just plug that in for your taxes, and you get a 1099, and that's it. But always consult your tax attorney or advisor, of course. And I see the comments and questions, and let me get to those in just a second. IRA, yes, there might be financial or experience requirements, so contact us. And self-directed IRAs, trading alternative assets, could be a great idea, according to Forbes. And then why the E-minis? Remember, we kind of briefly touched on that. Well, they're liquid, they're efficient, they're cost-effective, and they're huge. So they're actually bigger than you think. So the E-mini S&P 500, it outtrades all ETFs around the world by over 2.5 times in terms of its average daily dollar volume. So in terms of the SPY, the E-mini S&P 500, it's almost 10 times greater in terms of the average daily dollar volume, and then over the compared to the ETFs around the world, 2.5 times greater. So this is where you want to be, folks. This is the space to be in when you're trading. You need that depth and volume and liquidity, that access that offers superior execution. According to the CME group, they did a white paper. Compared to SPX options, the ES options offer a savings of $4 to $15 per contract. So you get the tight bid offer spreads, and then you get the largest market share, all the densely packed strike prices, and everything's available for you typically when the algo needs it. So you have 100 expirations, the granularity and coverage. So that's what I mean when the algo is looking for strike prices. It's typically going to find what it needs to build those trades that you saw on Theta Trader. That's because there's so much volume and liquidity. You know, here's a Condor, for example, or it could be a Dragonfly. Let's just say here's calls and puts on a trade. Some time goes by and you have another set of calls and puts. So more time goes by and you got another set of puts and calls. So you want to keep your strike prices and expirations laddered and varied. You don't want a concentration of risk in any one strike or expiration. And having that volume and liquidity is what allows that to happen. Now, this is very important. These E-mini spreads, whether it's the E-mini S&P, NASDAQ, or Russell, if you do a 6-legged spread, a Dragonfly, with us, your order is placed as one object at one net price. If you try to do that with a stock brokerage, you can't do it at one order at one net price as one object. You have to break it up into two separate spread orders. It's very clunky and cumbersome. Then you have to manage it as two separate trades. So that's a huge advantage to trading in our space with us. And then remember too, we're looking at just 2 or 3 markets, not thousands. Efficient margin use versus stocks. There's a clear cost structure, so there's no hidden gotcha fees or cost involved. Remember, these are E-mini futures options. They trade at the CME Group, the largest futures exchange in the world, on the Globex electronic exchange. And that means every order, if you place an order for one option or 1,000 options, those orders are all filled through the Globex exchange. That means you get equal treatment for every order. There's no payment for order flow, ridiculous stuff like you get with stocks and that whole Robinhood thing. Folks, there's no free trading. Yes, everyone can have a brokerage firm, stock brokerage account, but it's not free trading. Can't believe they get away with saying that. It's payment for order flow. So the most popular trading apps generate lots of revenue from their payment for order flow, and they can make more money from stock options than regular stock. So that's why they do it, folks. It's not doing you any favors. It's not commission free. It's a hidden cost. Robinhood customer orders executed at prices inferior to other brokers. So they get fined all the time and blah, blah, blah. But you're trying to save a penny to lose a nickel if you think you're trading for free uh, with this, stock trading app of some kind. Payment for order flows disguised commissions. If you want the broker to work for you, pay a commission. And nothing of value is truly ever free. I think that's kind of the summary there. So enough of that, but people want to know what's our commission rate. Very competitive. It's 5.25 round turn. That's per option. And you think, well, gee, that sounds a lot, like a lot. Well, here's an example. This is off a big box brokerage firm. Took a copy paste screenshot here, and they say they're at $2.25 per side. But keep in mind, that's per side. And I'm telling you, our rates are round turn all in. That includes everything else. So they don't tell you that they have to add more fees on top, like clearing and exchange fees. And that makes the total higher than what we charge. So our rates are competitive. How about our performance? Well, you saw the trade alert performance, already viewed that. And of course, everyone accepts trades differently and does things differently. So these are self-directed accounts. So everyone's performance is different. And again, keep in mind, all of the calculations in Theta Trader are net of all trading cost. And then what size of account? That's up to you, but if you want to do the Dragonflies and the Condors, maybe you want more than, you want to have 2 or 3 or 4 Dragonflies going at once and some Condors and other spreads and whatnot, you're going to want to be able to diversify those strikes and expirations. So really 25,000 is a minimum on that. And here's something people love. You can get a rebate. You have a $100,000 account or more, and we'll just issue a 100% rebate on that membership. If you have 50,000 to 100,000, we'll do a 50% rebate on that membership fee. So yes, absolutely, people love taking us up on that offer. And we're getting close to the end here, and I'm going to get some of your questions, so stick around. Again, any kind of a trading account that any brokerage firm offers, same thing with us, IRA, individual, joint, corporate, LLC, trust, you name it. Any of these other trust or corporate accounts or whatnot might take a little longer, but sometimes individual or joint accounts can be opened in just a day. Now, why would you even consider using Theta Trader and something that we call a non-correlated alternative? That's really what Theta Trader is. You have strategies for any market condition. You don't just passively buy something and hang on to it, and, for dear life, as they say. Well, alternatives may improve diversification and lower portfolio risk. And then what's been happening, folks? Well, the central bank fueled asset price appreciation, or another word for that is inflation. Here's a great chart. The blue line is the S&P 500. The black line is essentially the money printing from the Federal Reserve. So you can see that correlation is awfully strong, very positively correlated. And now, of course, they're tightening 75 points last month, and maybe next week we'll get another 75, if not 100. But meanwhile, what that's doing, here's from back to 2000. Here's the purchasing power of a dollar. Went from $1 down to 58 cents in just over 20 years. So that's what inflation does to us, folks. The official inflation rate is much different than, I think, what they call the shadow stats, or the real rate. If you calculate the CPI like we did in 1980, our inflation rate would be 17%. Here's what that looks like, folks, at least according to the official numbers. But you all know that. But producer price inflation, surging back to near record highs. Look at that. 93% of Americans need a side hustle. 50% are um, considering another side hustle due to inflation. So that's picking money right out of our pockets. Initial jobless claims soaring to the highest since November. So you can see this trend is moving in the wrong direction. B of A now forecasting a mild recession for just the next, well, starting in a couple months, really. B of America profit tumbling, their loss reserves jump, inflation outpacing wage growth. This is kind of interesting. Now cutting into spending. Here's this chart. Weekly earnings have risen by 4.2% from a year earlier, but because inflation is so bad, adjusted for inflation, those wages are actually down 4.5%. So that's a pretty sad story. GDP forecasts are being cut. Now we're into negative territory, forecasting negative GDP growth by the Atlanta Fed. Here's an article from April. I left it in here because he's right. It says the Fed always screws up. The stocks will be in a bear market by summer. Well, here we are 3 months later, and I think it's fair to say we are in a bear market. It says here they're going to keep tightening as the markets go down, and that's not something that's ever been done in history. During economic slowdowns, the Fed would, if anything, loosen money, not tighten. But inflation is so bad, they're stuck. And look at this, recession in the near future seemed like a long shot. Now it looks hard to avoid. So the Fed here, you got 40-year high of inflation, most unaffordable housing, worst consumer confidence, third worst S&P year-to-date performance ever. The Fed is the source of the problems they're meant to solve. I think there's a lot of truth to that. But these inflation deniers are finally admitting they were wrong. You know, you've got Treasury Secretary Yellen, and you got JP Morgan and Goldman Sachs and the World Bank and blah, blah, blah. Here they're saying, well, gee, inflation's alarmingly high. And, you know, just a few months ago, they were saying it was transitory. Here's the yield curve. It's going negative, and all you need to know is that that's a harbinger of a recession, typically speaking. Small business optimism outlook is crashing, yield curve inverting, like I mentioned. Anyway, it's all doom and gloom, but the point is there's a great argument here to use alternatives such as what we're doing with Theta Trader. Don't be stuck. I'm going to go through some of these. Home buyers canceling deals, Empire State Manufacturing, confidence dropping like a rock. But here's what I want to get to. The biggest crash, mean reversion. So you can see this green line is your exponential growth trend, and the black line is the S&P 500. But eventually, prices do revert back to the mean. So we may have a lot further to go, folks. And then also that 60-40 portfolio that people always talk about could be a lost decade for that approach. That classic 60-40 portfolio is getting clobbered. And it says here, this is an interesting one just from last month. The stock market's return will be negative 3.3% in the next decade. And they point to the single greatest predictor, and that's the household portfolio allocation to equities, and meaning it's so high right now already. So the historical correlation between this indicator and the stock market, you've got this minus 3.3% projection. In that 10-year horizon, they're saying there's a 67.8% chance of that happening, according to this particular statistic. So they might be right, but you want to look at something that has a low correlation to, you know, these traditional investments. That's why we like Theta Trader. Remember here, this is a great little chart. There are many periods of time where 10, 20, 25 years, if you get into the market and you look at your performance 20 years later, it's going to be zero. In fact, it'll be negative because of inflation. So you can't just always rely on holding on. And this is kind of stating the obvious, but if you're down 50% on a stock portfolio, you need a 100% return to get back to even. So you want to avoid those drawdowns. You know, like you got Bitcoin down 70%, you've got to be up 233% just to get back to even. So that's a disaster. Avoid those drawdowns. You need some exposure to alternatives such as what we do with Theta Trader, at least in our humble opinion. So Theta Trader pre-selected spread trades, auto trade exits with the RTI. You've got those one-touch trade alerts, and then of course the personal coaching. And then really you complete that order form here, and then you get your login credentials for Theta Trader. You'll get an email with your account opening link, and you can do that all electronically. Then you fund the account and begin trading. So there we have that. And now let me see if I can get to some of these comments and questions that are coming in. And I see the link up there. That's correct. All right, let me see some of the questions here. Okay, someone mentioned buying options can be good for specific conditions, or so can selling options. Yeah, of course, that's obvious, clearly, but one has a mathematical probability that's more favorable than the other, no matter the conditions. And someone's mentioning mitigation or rolls. You'll see in the trade alert history that I showed, I think we had one roll on one of our vertical call spreads. So rarely do we do a roll. Typically we just close out the trade if we have to take a loss and we move on. And we are the brokerage firm. Altivest is the brokerage firm. So everything works with Altivest. You open an account with Altivest and you use our technology is Theta Trader and the alerts. That's something we developed. But good question. We talked about the minimum account size there. And yeah, we reviewed the trade performance already. So you can see the replay, I guess, if you want to look at that again. We talked about the commission rates. We talked about that already. And yes, there is a recording available. Minimum account size, we talked about that, 25,000. And unfortunately, we cannot work with Canadians. Sorry about that. But do let us know where you're located, because if you have a legal residence in the US, that can work. Thank you, Miss Adams here. Says, I love it. Thank you. Someone's asking about the UK markets. And no, we're trading US markets. So we're trading the E-minis, like we talked about, S&P 500, NASDAQ 100, and Russell 2000. And our performance on the trade alerts, at least, you can see that in the webinar. We talked about that. We spent a few minutes on that, looked at our yearly performance there. And the replay, people are asking about that. Yes, that will be available, should be available within a day on the replay. And someone's asking auto trader. No, this is not auto trading. This is a self-directed account. So you'd have your Theta Trader account. You could see the different Theta trades available every day, and then you would be able to choose and select any Theta trades that you wanted from the menu, or you'll receive those trade alerts, of course, as well, and you can accept or reject those trade alerts. So yeah, that's how that works. And all right, what else is there? And of course, my number is right here, 949-236-6961. And people call a lot after these, so you can be one of them and just leave a message if I can't pick up the phone, and we'll call you back. But typically people just go right to the link and sign up, and we can get you started and get you onboarded right away. And then when you're ready to start trading, you just fund the account and you're off. So let's see, what else is there? Let me see if there's a few more comments and questions coming in. Yeah, someone asked if they can basically sign up, start now. Yeah, you can sign up, absolutely, become a member right now, and you don't have to begin trading right away. There's no rush for you to begin trading at any particular time with real money. I mean, some people sign up, become a member, and it may be several months before they start trading with real money. So yes, you can get familiar with the Theta Trader platform. You can use it in demo mode if you'd like, before you start trading with real money. Yeah, so minimum trade on a one trade, I'm not sure I understand that, but essentially, a one lot would be a minimum size trade, like one Condor spread or one vertical spread or one Dragonfly, spread, if that answers the question. So did anyone want to see anything else? You want me to go back backwards on the presentation anywhere. If anyone wants to sit around for another minute or two, I can do that. But I think I've covered a lot of ground here. I know there's a lot of material in the webinar, so, but it is very simple, really, in terms of the spread trades are all generated for you, and you simply view them, decide, on your quantity, or just simply accept the trade alert and then use the automation to close out that trade when the RTI says it's either red or blue. So you're always going to be out of a trade before it expires. Oh, what just happened here? Let me do this again here, folks. All right, so I think we're probably pretty good here. Going back there, we don't need to go back to the beginning, but I'll go right back to the end here. All right, so there we go. I think we're going to wrap it up. And thank you everyone for joining and asking questions. I love all the questions. And let's see, someone's asking about, oh, I see, they want to see the performance screen. Well, we can do that. You can see all the, let me go back here. Looks like we've got some people signing up already. Thank you very much, folks, for, yeah, let me know if you're signing up, actually. Put it in there when you sign up. That's kind of fun to see it happening in real time. Okay, so this is the 12-month trade alert history log. And I think it's kind of self-explanatory. You've got your buy or sell, the B or S, the W or L, win or loss. The N is neutral, no result, neutral result. The date you entered, the date you closed. And again, you'll notice a lot of the selling or collecting premium strategies are the ones that are going to be the winners. And typically the ones where we are buying premium are going to be the ones that are losers. So that's just kind of, you saw how it worked, how the math works. It's just statistics, folks. And a lot of times if you buy a call spread or a put spread or something, or you could even buy a Condor, maybe you buy whatever it is, it's a very, very small fraction of your account that you're risking. So you might have, 10 or 20 basis points of your entire portfolio allocated towards buying some particular spreads or something. And if they don't work, it's has a very, very, very minimal impact on your portfolio. So that's the good news when you buy options. Your risk is very limited, and we're certainly not going to spend a lot of money on these options when we do buy them. So you can see here the selling. Typically, when you end up selling these strategies, just like the math would suggest, you see a lot of the winners there. In fact, it's very difficult to find well, here's one. Here's a Dragonfly we sold that had no result, neutral result, I should say. But it's difficult to find a Dragonfly that was a loss. For example, this year, let me see. Here's one last year, or essentially selling anything for the vast majority of the history here. You'll see that you can kind of look at it yourself. And then people are asking about percentages. Well, we can't do that simply because everyone's different. Every account is different. So we can just show you the history here of the entry date and the exit date, and whether it's a buy or sell, and whether it's a win or a loss. That's kind of a fun page there. What is that? 80, 16, 15 winners in a row there. Actually, even going back. So that's a good streak. That would be a fun one. Actually, it even continues on to the next page. But again, you see some of the trades are still open because they don't have a result. Like this one here and this one here. And you'll notice actually sometimes you buy a spread and it does turn out to be a winner too. So some of these, we bought this call spread, bought this put spread here and here, and those turned out to be winners. And then here's the last page. You can see again, these last three are still open positions. All right, hopefully that helps. Did it help did that help everybody? Still have a big crowd here, over 100 something people. That's great. Yep, I see someone else signed up. All right. Well, if there's anything else, let me know. Pop it in there. Let's see, any other questions? Yeah, a lot of the condors are typically 20 wide. That's right. The difference between the call and the puts are 20 wide. That's correct. Average trade size. Well, again, that just depends on the account and how much money. There's 7 figures accounts, and there are people with much less. So it just depends on that account. Someone's asking losers compared to winners. Yeah, the best way to answer that is just, again, look at the trade log here. I know I'm going quickly backwards here, but the best thing to do if you want to really analyze this would be to go back on the replay. And not everyone accepts every alert. So, again, everyone's different. Everyone's going to be doing something differently, and other people are using the Theta Trader platform itself and maybe kind of modifying some trades every now and then or whatever. So yeah, vertical spreads, absolutely. You can absolutely trade vertical spreads. Here, let me switch gears real quick and show you. Let me just go back to the Theta Trader dashboard. So yeah, here's a simple call spread. Here's one with 9 days till expiration. Somebody was asking about just simple vertical spreads. So you can see here this 39.70 call you buy, and you sell a 39.90 call. So that's buying a call spread. So that would be a long vertical. You could do, if you're bearish, you'd want to actually sell a call spread. So you're collecting premium, selling a call spread that's far above the market or far out of the money. Of course, it depends on the expiration as to how far away you are, but in this example here, just a simple vertical, sell a 40.70 and buy a 40.90. So you're collecting premium on that, collecting a 1.25. So yeah, absolutely, you can do simple verticals. Yeah, if you're in the EU, send me an email or talk to me, call me. It depends where you are. Again, I'd love to have you, but regulations are what they are. Eric, E-R-I-K, at altavest.com. So E-R-I-K at altavest.com. That's my direct email. And let's see if there's anything else we wanted to review. You can look at all your positions, of course, right on the home page here on the dashboard. You can go back here, look at closed, open, your simulators here, trade builder. If you want to do your own thing, that's fine. So really, it's very simple, and it's not overly complicated. We don't have a lot of bells and whistles, and that's by design. And let's see if there's anything else here I'm missing. Anything else, folks? A lot of good feedback, a lot of good comments and questions. Yeah, if you signed up, let me know. I'd like to see that there in the chat box, the question box. And let's see here, someone's asking about a demo. Yeah, basically you sign up, you become a member, and then you have full access to the Theta Trader platform, and you can use it in demo mode. So certainly some people do that. But you might find that after just, a week or short period of time, it's so simple and user friendly that, you want to start trading. So, but absolutely you can use it in demo mode. Someone's asking about the account balances, 40,000. Yeah, that's fine. You can do that. And someone's asking about 10, no, 25,000 is really the minimum. And that's simply because the strategies require a certain amount of margin, and it wouldn't do the whole platform justice if you try to do it with a lot less, because you'd only be limited to a few trades at a time, and you really want to have these trades diversified and allocated in a way that's going to best give you a shot here at doing well. We want you to do well and be with us for a long time. But good question. Yeah, and the commissions are all built into someone's asking about commissions, so that's all part of the trade. So like a Dragonfly has 6 legs, for example, and a Condor, has 4, or vertical spread has 2. So it's 5.25 per option. And that's all pre-calculated, in every trade. It's all listed here in this table. You can see, example, I don't know, just look at the simple call spread. You just saw the Dragonfly. Got to think real hard looking into that database and all the algos there. So you can see the commission listed here for that particular trade. So yeah, everything's there and everything is net. So the percentages and everything are net of all commissions. And someone's asking, well, we can't provide an equity curve uh, simply because everyone's performance is different. But yes, I understand the question. And if we were managing money for people, if we were a hedge fund or a CTA, then of course we'd have all that information for you. But again, we're a brokerage firm, everyone's self-directed, and they make their own trading decisions. We might offer them the Theta Trader solution and the guidance and the recommendations, but people end up doing different things at different times. Okay, let's see here. I think the link is in the box, but let me put it in there. Okay, I just put the link in there. Someone says, love it. Yep, all right. Thank you so much. People do love it, actually, I have to say, and with good reason. After 20 some years of being in the business, handling thousands of clients and millions of orders, that was the catalyst for developing Theta Trader. So we took all that feedback and put it into Theta Trader. So this is something that's otherwise very complicated and unattainable to the average retail trader. And now it's available to them because, an institution would have a full staff of programmers and developers and traders being able to build these kind of 6-legged spreads and manage these types of trades. Uh, so this is kind of a bit of an equalizer. We can take something complicated and simplify it so that it's now accessible for all of us. Okay, so let's see here. I put that in the chat box. Put the sign up link is there. We talked about commissions, and the algorithm is the one generating the trades. So you can see I guess you'd call it the wizard behind the curtain is the algo, the formula, something we developed several years ago with lots of various inputs in there. And of course, some of the ones are pretty obvious. Obviously days till expiration or time or theta uh, is one of the inputs in the formula, as well as proximity and to the strike in the market and this and that and the other, and some other statistical measures. But yeah, that's kind of our proprietary formula that builds Theta trades. All right. Yeah, I think that's, let me just switch gears real quick. And if there's anything else anyone wants to see, good question. Yeah, it's lifetime. There's no maintenance fees. There's no um, quarterly update fees. There's nothing secret and that's going to surprise you. It's just a $5.97 one-time membership fee, and that allows you access to everything we just talked about. Theta Trader, including someone to talk to. So yeah, thank you for the compliment. Someone says, thanks a lot, it was great. Are there any other charges? Yep, we wrote the algo. Yep, absolutely. And you get the recording. That'll be emailed to you shortly, within a day typically. Very good. Oh, just a second here. Let me see. I see people have their hand up. It's kind of hard for me to see with so many windows. All right, I think we're good. I think I've got everything covered. If I missed you somehow, I don't think I missed any comments or questions, but if I did, you know how to get a hold of me. And let me pull that question pane out. All right, I think we'll wrap it up there, folks. But again, I'll put my comment in here, my email. And you've got my number, you've got let me switch screens again. Let me go right to the end here. Okay. So there is the final screen for you. You can see that, take a screenshot if you'd like. Let me switch over, still sharing the other. Okay, I still got a big crowd, a big room of people here, and I want to make sure I'm getting to everyone. So anything else, folks? Any other comments or questions that I haven't been able to cover yet? Just scrolling through, making sure I didn't miss anything. I'm scrolling one more time, and yep, thanks for the compliment. Great presentation. Thank you for that. Yeah, and I think, just to summarize, and I'll quit talking here. It's been been keeping you here a while, so the full picture here. Someone's asking about the full picture, winners, losers. Well, that's the best I can do in terms of the trade history. We can provide the entry date, the exit date, the specifics of the trade, and whether it's a winner or a loser. But I can tell you that our positioning has been effectively bearish this year. So that clearly, with the markets doing what it has been doing for this year, you kind of get the picture there. We've been on the right side of things for the most part. So we're pleased with that. And yep, someone said they just signed up. Great. Someone said signing up again, signing up now. Thank you very much. And if you do have any comments or questions between Friday, and the reason we expire the special offers, and that does expire Friday, but the reason why is because we keep the material fresh. That's why. And also, I know how it is. I've been through presentations or whatever it may be, and I like something and I want to do it, and a butterfly flies past the window and I get distracted, and then I come back to it later and the opportunity is over with. So I want to just kind of encourage us to not only call me directly, email me, ask me questions now. I want to make sure you're comfortable, but if you sign up with that 30-day guarantee, doesn't work out for you, that's not our business, is trying to hold someone's $500. That's not our business. Our business is trading and working with solutions that can help people trade and stick with us for years and years and years. So that's the idea. But really, you don't have any risk on that membership fee. And you know what else? I'll tell you one thing. I get this all the time, and this is not hyperbole. Talking to people all week, and here's a synopsis of a scenario I get. Person says, I've signed up for 4 or 5 different trade alert services. I'm following 2 or 3 different newsletters. I have 2 or 3 different brokerage accounts, different platforms I'm using. I'm, reading this or that publication or watching CNBC or whatever it is, and they're absolutely overwhelmed and their head is spinning. And they say, I absolutely love this approach that you're taking. It's not high velocity. It's kind of like watching paint dry at times, and there's no babysitting. You don't have to screen watch all day, and it's a low touch type of trading solution that actually allows you access to a very, very unique, sophisticated strategy that can work in many, many, many different market conditions. You don't need to just simply rely on buying something and holding on to it for dear life. That whole passive investing thing is, I think, behind us, folks. So we get a lot of compliments on that. So I think it does fit. Someone's asking about the trading style. So I think it does fit really just about anyone's trading style, because it is very user-friendly and there's not a big learning curve. And we have the proverbial airline pilots. You've got the ophthalmologist doing LASIK. I could attorneys, whatever it is. I mean, I can go through it and oh yeah, I was in the cockpit. I responded to your alert. Like, oh, I'm in the supermarket. I'm at my grandson's soccer game. I just responded to the alert. So that's it. That's how carefree we can make this for you. And that's the idea, to make this technology make your life easier and still provide you access to something that is a bit groundbreaking, I think, in terms of retail investors. All right, folks, I think I've chatted enough. And again, I invite you to call me directly if you have any other comments or questions. And we will leave it at that for now. I appreciate all your time and questions. And I hate hanging up because there's still a big crowd here. So I'm wondering if I'm missing some questions, but I don't think I am. On the one hand, I don't mind at all. This is my job, sitting here and talking to you. On the other hand, I don't want to overstay my welcome and wear that out. So anyway, all right, folks, give me a ring, email, whatever it may be, or just go right to that link, get yourself signed up, and we will get you onboarded and on the road. Thanks again. We'll talk to you soon. Bye-bye.